Okay, party people, back again with another market review for gold on the 5 minute chart. And again, this is my strategy for gold on the 5 minute chart using ICT breakers. And as you know from the top, we always make sure that we are set to New York. Why? Because ICT strategies and concepts work specifically to New York time. First things first, you want to do, you want to put a line at midnight. Yesterday was Thursday, so it will put a line there. And then 7 a.m. New York time, which shows us the New York session. So then everything that's on the left hand side is the London session. Secondly, what you want to do for the London session, you want to highlight the high and you want to highlight the low of the London session. You want to draw that out until price hits it. If price doesn't hit it, keep drawing it out into the future. As you see, the London session high was not hit, so I'm going to keep on drawing it out into today's trading. So we hit it there, so then I can bring that line back. Next, what you want to do in the London session, you want to highlight anything that stands out. What are points that stand out? The breaker over. If there's a free breaker, I'm going to highlight that and I'm going to draw it out into the future, like so. If there's a fair value gap that just sticks out to me, it's too big, it's too juicy, price might come there, to do whatever. We never know. We see once it gets there, what is it doing? I draw that out into the future. I drew this one here out, and ironically, where did price go? Boom. It's going to go for liquidity. It's going to go for any place where it can grab onto. Because as I've stated before, using the ICT analogy, price is like a rock climber. It's looking for a place to climb up and swing higher, or it's looking or it's looking for a place to put its foot and descend, work its way down and swing lower. So these are all the things that you should be highlighting. So for today's trading, I'd highlight this immediately, but I'm digressing. But I'm just trying to break down my thought process when I'm looking at the chart so that you can start getting into this, and with more practice you'll start understanding how these things come together. So then price broke down after 7. Another thing, always keep in mind that this strategy, even though it can work for the London session, I like to use it specifically for the New York session because that's where I have the highest hit rate. London session, I'll get stopped out like 1-2 times. I don't like that. I like to get in and hold. I like to put in a trade twice. So what do I mean by that? Maybe it'll stop me out the first time, cool. Second time, if it stops me out the third time, I stop trading that day because that means I'm off. There's something I'm not seeing. There's something I'm not just seeing. And that's going to happen. You can't just have winners all the time. So I don't trade the London session because of that, because I'll get stopped out a few times and then I'll just break even. And that's annoying to me. So I wait for the New York session, and that's where I have my highest hit rate. So then you want to highlight 7 a.m. to 11 a.m., which is the London session, and it's also the ICT kill zone. This is where you'll find your highest probability trades. So then, as you see, 7 o'clock, I waited because why? I saw this low was like right there for the taking. So I'm like, you know what? I'm going to wait. I'm going to be patient. I'm going to wait till price trades underneath and then trades above it. So then we break above right there with an ICT breaker. You're like, where's the breaker? Here's the breaker right here. That's the breaker. And I know it doesn't look like the classic way that it usually looks, but breakers come in variations, and all you need to practice is understanding the variations and understanding the specific time and place that you need to look for them. Don't just go on the chart and start looking for breakers. Do not do that. You will get hurt. Specific times. My key zone, I always wait for 8:30 because that's when price usually starts making big movements. That's when the big players come into play, and that's when you can piggyback off them because we small fry. So we piggyback off the big boys, and whenever I see a breaker, it's time for me to piggyback. So then that breaker that I drew out for you on the 5-minute chart, there's it right here. There's it right here. So price drew down, made a high, drew down, false high, drew down. And then here, after we took out these lows here from the previous day, we started drawing up. We didn't take out that high, but we did take out these two small highs. And then we took out this high again. And then look, where did we retrace back into? Right there, into the breaker on the 5-minute chart. What does that say to me? That lets me know, okay, it's time to go in. If I don't get in there, I'll get in right here, and I'll put my stop right there. But if I got in here, I'll put my stop in right there, because I don't know what might happen if I'm looking specifically at the 5-minute chart. And on the 1-minute chart, what I want to see is if price has taken out a key low, I want to see multiple highs being taken out. That's 1, that's 2, that's 3, that's 4. But 3 is enough for me. I use 3 as a, okay, cool, I can go long. And how would I have went long here? As I said, those points that you are that's a short. Those points that you are drawing out into the future, when you start highlighting in the morning, those points are your key take profits. So you could have had your TP right there, good move. Or you could have had your TP slightly higher. And always remember that when you're dealing with fair value gaps, you never want to aim for the whole fair value gap. You want to aim for 50% of it. So I think I did aim for the whole of it because it was the morning like session, and price is usually moving. It's filling gaps. Even though it's going to wick through, it's filling gaps. So I was pretty confident about that. You can see the short on my YouTube page. I sped the video up, but it's the exact same position. I went long here. And then if you wanted to, you could have aimed for this here, which happened after 12 o'clock, which is when price can still move aggressively. It does, but it's rare. It's rare. So then you just want to aim for half of the fair value gap at best. At best, you want to aim for half of the fair value gap, or you want to aim for the breaker right there. But always go for half of the fair value gap for practice. And then the more you start understanding time and what happens in between those time, then you start getting like an instinct for it. So that was the move of the day. We were extremely bullish. This is extremely bullish. We left this huge ass gap here, which is a breakaway gap. And look how these candles are pretty much respecting this gap. So that kind of lets me know that we are extremely bullish, and that's what we're going to be doing for the rest of the day. So we did have a breaker here, but it was short-lived, and it wasn't a key time to expect a breaker. But as I said, 8:30 is when you are most likely to find your first position, and your second position, when are you most likely to find it? 10:30. So boom, boom. What time is that? That's 10:30. What do we have there? A fair value gap. So is that not another position that you could have had? Right there. Boom. And nice and easy. So I just want to see if this, see, so this is when the importance of putting your stop on the low comes in, because if you just had it just a little bit there, you would have been knocked out. But if you had it on the low swing, and I explained this yesterday, and where was I going to add my TP? Right here at this high here. Once price starts wicking like this here, that's when it becomes perfect to scalp for me, in my opinion. I'm just scalping away. Boops, in and out. Okay, cool. I'm not being too greedy. At times I forget and I'll aim too high, and then it'll reverse on me. Then instead of me getting the full TP that I was supposed to get, because then I see, oh shit, it's breaking down, I need to get out, then I end up getting half. So that too comes in experience and time. I'm still working it, but these were the two moves that I could have bid in. I was in this one here, so that was more than enough for me yesterday, and I went to the side. As I said, I have my daily target, and once I hit it, I've learned and I'm still learning to sit down and not do anything after that. Okay,